If you look at December 2019, close to 16 million barrels per day flows through Strait of Hormuz. And we were earlier talking about a dependency of Asian buyers. China and Japan remain very, very dependent. So we do see risks to the maritime fleet. US and UK both come out and put out warnings for transiting ships in the Middle Eastern waters. So this will continue to be a tenterhook for maritime fleet in the region.
Right. Do you have numbers to substantiate that? Because I know for a fact that 20% of the world's oil supply comes in from the Strait of Hormuz,
Indeed.
right?
Yes.
What does that translate into a value figure?
Yeah, so we don't have that numbers, but if you look at oil on water, right, we're talking about 20% of global oil trade flows. And just yesterday we put out an update where we said the control concentration is 40% probability for us at IHS Markit, and all-out war is around 35%. We do believe there's a high risk of tanker attacks in or near the Iranian territorial waters. And you have to understand that the commercial shipping is not equipped for something like this, right? So geopolitical risks are paramount for shipping. And we've already seen the VLCC freight rates, as well as late last year, we've started seeing insurance premium basically rising multifold for not only cargo on board, but the vessels as well.
Right, and I remember in the aftermath of the attack on the Abqaiq facility in Saudi Arabia, the insurance premiums went up already for shippers. So did they stay elevated? I mean, what happens now relative to that increase already?
They have stayed elevated, right? Even the freight rates as well as insurance premium. But this is a major escalation. I think we don't know what's going to happen next, but it's a low probability scenario for us, the closure of Strait of Hormuz, but we do highlight that risk.
How bad can it get?
So a worst case scenario will be a VLCC blow up in the Middle East, right? Or in the Strait of Hormuz. A closure of Strait of Hormuz could take several months to clear, right? That's not a base case scenario. That's something which has come again to the foreground. Last year it did come in, but we saw de-escalation. But after the recent attacks and what happened today morning, it's a real risk in 2020.
Okay, and just as a follow-up, some of these are oil tankers, some of them are, also transporting hard commodities, aluminium, copper. So how do you kind of break it down between, how much is at risk for the oil markets versus the commodity markets in general?
It's primarily oil market story. If you look at the flows in terms of bulk commodities coming out of Middle East, it's not that big. As well as we do have some container shipping which goes in there, but it's primarily oil market story and oil tanker supply chain infrastructure.
I'm just curious, in the short term, whether some of these shipping firms are making the decision just to not go through the passage, not go through the Straits of Hormuz if they can, right? Rather than take on higher insurance premiums, take on more security precautions. I mean, what do you see in the way of that kind of activity?
So what happens is, like I said, shipping firms and Middle East remains a bedrock of VLCC loadings, right? Almost 20%, like we said, flows through that, so they cannot avoid that. Despite the US production boom, Middle Eastern states as well as oil production is key demand center for the VLCC loadings. What we are seeing is certainly the freight rates have rocketed. VLCCs are elevated at $100,000 per day. These vessels were earning $20,000, $30,000 per day just a few years back. Right, so the cost of transportation will continue to rise, and that will be a key story for 2020.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.